as today's event will be very impactful and there will be a lot of learning points. Please put your hands together and welcome our first speaker to this podium, Mr. Ladi Asuni. Mr. Ladi Asuni is a technology advisory partner at KPMG. His experience spans 2 decades of delivering digital and technology-enabled business transformation and performance improvement solutions for institutions across different industries. Ladi is an active contributor to digital thought leadership and has presented views on emerging digital trends, evolution of digital banking channels, open banking, and payment development in Africa. Ladi is a member of the FinTech group in the firm and played an active role in the recent largest FinTech summit in Nigeria that attracted leading global technology firms like Google, Konga, etc. He plays an active role in the emerging FinTech space in Nigeria and is a member of the CBN Blockchain Committee and other FinTech initiatives including Open Banking Nigeria, Africa FinTech Foundry, etc. Please once again put your hands together to Mr. Asuni as he comes up to the stage to deliver his opening remarks regarding the market report, a report on the facts and trends shaping the private equity and tech ecosystem in Nigeria.
Good morning, everyone. It's a pleasure to have the opportunity to share with you today. I'm also recognizing the people joining online. We can't see you, and definitely feel your presence. So I'm going to have 20 minutes. I know we haven't started on time, so we'll just try to keep it sharp. I think we'll get better engagement when we have the interactive session. Alright, so for my presentation today, this is not working. It just whoever is my project will take my cue. So I'm just going to be talking about a few of the sector highlights. First of all, what I've been seeing in the fintech sector from within the region, as well as Nigeria specifically, and then we're going to talk about some of the challenges in terms of funding. What are the opportunities we see in terms of the sector outlook. So all of us in this room are very familiar with the fintech space. Basically, fintech is just the evolution of our financial services to embed the use of technology, enabling technologies, things like analytics, things like our data and insights, mobile phones, IoTs in some cases to enhance the delivery of financial services. So basically, it's a natural evolution of the way we've done, commerce naturally. And by leveraging these technologies, organizations are able to benefit from, the ease of technology, lowering friction in performing transactions. So a few years back, before you can take a cab, you have to think about, first of all, standing out, get a cab. Do you have the right amount? What's the change? What's the, how do you get your change from the driver? What's the rounding? So all sorts of friction around just doing your commerce. But then in comes, the fintech evolution where a customer is able to link their card and all of a sudden you just get into your cab, get into your destination and walk out. It's almost like nothing happened. So it's changed that very high friction experience to a zero friction encounter, and this is facilitating growth of businesses in globally. So there's technology evolution that is driving fintech. There is also the customer expectation. Many years ago, if you want to travel, you call your agents, you have to make a reservation through them. But then the likes of Booking.com, the likes of Wakanow have changed the experience there. And as you see, because humans, our experiences are not isolated. If you're enjoying digital experiences within a sector, right? They naturally carry over those expectations even to their banking and financial services. So you have all of that also coming up. So the customer expectations are following them regardless of whatever industry or sector they're interacting. And that's also part of what's been stimulating what we're seeing as a fintech evolution. Funding. We've also had a lot of funding coming into this space. Funding drives innovation. When people talk about Silicon Valley, when people talk about a number of all those innovation hubs across the world, the major components that come together to drive innovation, apart from the academia, apart from the young talents, apart from the technology, is also the funding, because funding is actually very critical when you talk about spurring innovation. And of course, there's a support from the government and the regulator, because of, we all need to operate within the safe parameters of regulation. We need to be able to protect the customer's interest. So of course, all of these come together to drive the sector. Now, on the next slide, when we look at the various segments within the fintech ecosystem, you can look at it from different lenses. You have the people that focus on payments, basically enabling payments in exchange for services or goods. We have the people playing in the RegTech, regulatory technology space. You have the likes of MTech, for instance, that's working with the CBN, creating a sandbox for fintechs to play. You have the crypto players, that are basically creating exchanges, platforms for people to exchange digital currency. We have the InsurTech, we have the lending tech, we have other players around, cyber security and all around enabling, transactions. But interestingly, what you'd see is that there is an unfair distribution or focus when it comes to payments. And it's understandable, because today, regardless of what you want to do in the fintech space, whether you're talking about lending, whether you're talking about investment, you kind of begin to realize that payments, wallets is the entry point. It's almost like the clincher, because you have to get your value first into the wallet. The wallet has to be maintained by a bank. When you want to also withdraw, if you're taking a loan, if you want to, get the funds, it's also a payment service that enables that. So payments is sort of critical. So it's no surprise that payments is one of the areas that has received the most funding in the fintech space when you look at it globally. So payments is very relevant. And of course, when you then think about the role that credit plays in a society, then the question then, you begin to realize that there's still a lot of headroom for, the credits, lending, digital lending to still grow. So moving on quickly to some of the local trends, and I'll also be talking, and you pardon me because I'll oscillate between some global and some local trends. And why is this? Because we are not operating in isolation, right? When you look at the events of this year, for instance, we started the year, Nigeria's elections. Who can remember the very critical thing that happened? The Naira redesign, right? Naira redesign, there was a cash crunch in the country, and that put immense strain on liquidity for a lot of people, because you just needed to be able to transact. And this little episode just showed how weak, our payments infrastructure actually is as a nation, because banks struggled, fintech struggled, payments were failing, and all of a sudden, the space that all of us would have typically concluded was oversaturated with solutions was not even able to sustain Nigeria during this period, right? And there were some good outcomes from it too. I think during that episode, a couple of fintechs were also able to grow their business significantly. I'm trying as much as possible not to mention names today, but we all know players in the agency banking space that significantly ramped up their numbers, and right now are formidable forces in the fintech space just because of that little glitch. A lot of businesses move their accounts to these players, and it's been a positive story for them. The expectation for the industry still remains. We want to deepen financial inclusion. We want more people to use digital finance services. But the one thing that we must always, bring to bear is when people talk about financial inclusion, sometimes we talk about it like people should just go and open accounts or people should just use fintech solutions. But the question is, before you discuss financial inclusion, is first of all the concept of economic inclusion. To what end? It's not just about opening an account, and that's why you see that when you have people solving real problems, people bridging the gap between economic activities, that's where adoption really takes place. So the hopes and aspirations to grow financial inclusion in Nigeria from the current level it is, where it's hovering around 60, to the CBN's target of about 95% by 2024, which is just next year. The reality is that achieving that will have to do more with, embedding financial services in economic activities that will touch a lot more lives. So that's very critical. Another thing that we've also seen, and this now taking a look at the global landscape, the issue with Signature Bank, the financial services, the issues where Signature Bank, went down because of some of the, I would say, their financial planning activities, as the case may be, taking some wrong bets on some investments. And of course, we saw the ripple effect of that, not just in the US, but across other markets, because one way or the other, we are all connected. And as you look at the trend, the investment trend globally, and you see the decline, some of this has been attributed to incidents such as that. There are also other issues that have happened, relating to the Ukraine war, the more recent Israel-Palestine crisis. Even though that's more recent, but what you see from the trend generally is that there's been a general decline from what we saw last year or the prior years. At the peak of COVID, there was significant adoption of fintech solutions. There was significant growth in the fintech investment numbers, and all of that are somewhat tanked in this year. Now the outlook is that we may expect the headwinds to be sustained over the next couple of years. There is no immediate sign of recovery, at least not in this 2023, 2024. So the outlook is perhaps maybe from 2025, 2026, we may begin to see a bounce back. But of course, this will take some effort. Now, part of what the issues that we've seen in the sector has also resulted in is more scrutiny from the regulators, saying that how can we ensure that customers or people that use these services are protected in the event of any mishap. And you see that a lot of the regulation, which we'll go through, a lot of the regulations that have happened in the last couple of years have really been around strengthening the system, protecting the customer, protecting the vulnerable people within the system. So now we'll take a look at it from the perspective of the region. This on slide 8. Right. When you look at it from a regional perspective, fintech continues to be the major, in terms of the whole tech startup space. Fintech continues to be the sector that has been attracting the most investments. When you look at it for Africa, fintech accounted for well over 45% of the total investments that we've gotten in the last 5 years up until Q3 this year. I think that's about $7 billion. And of course, Nigeria has been one of the top beneficiaries or top destinations for fintech investments. Nigeria currently accounts for about 36%. The story has been a bit different for this year, but if you take an aggregated view over the last 5 years, Nigeria has actually been a top fintech destination, followed by the likes of South Africa, Egypt, Kenya, Senegal, also showing up in these numbers. And when you look at the leaderboard, where we talk about the unicorns, the fintechs that have been able to cross that 1 billion valuation, you see that Nigeria also, we have our very unfair share of the success stories when it comes to Africa fintech, with the likes of OPay there, Flutterwave into Switch, MNT Haaland, which is an Egyptian-based fintech, Chipper, and Wave, which is the Senegalese company. And what have these people, these leaders, what have they been able to do? You see that some of the common things around them is that a number of them play in the payment space, interestingly, payments, digital banking space. A number of them are operating at scale. A number of them have an Africa focus when it comes to scaling their business. So really skill matters when we're talking about fintech development. Now, moving to the situation in Nigeria, we'll just try to trend how has it been since 2019. When you take a look at that, we experienced a rapid, a ramp up between 2019 and 2021. We saw a very, a quick rise. It's almost like that's the birth of fintech. Now, this is not to say that fintech did not exist in Nigeria before this time, right? But you'll all agree with me that the whole thing became interesting, a lot of interest, happened around this period. And then, COVID, of course, a blessing, also amplified and accelerated certain trends when it comes to fintech adoption. So it all showed up in the numbers for that period. But like I said earlier, somewhere between 2022 and where we are today, things have sort of taken a bit of a slow turn. When it comes to the categories of funding, again, different things. What I would just like to point out there is that you see the trend. If you look at this chart, maybe 2 years ago, we would have had a bit more concentration around the early series funding. You'd have had people, maybe maximum you'd have one or two people that have crossed the Series B funding. But then as the market matures, you are beginning to see a fairer distribution of the investment fund across the different types of funding or the different series of funding, with more fintechs getting into advanced funding stages. And I know that NGX is in the room. I'm also interested in seeing how can we even go beyond VC funding, to more, more embedded funding sources, leveraging our local exchange, IPOs and things like that. Because for the industry to scale, local funding also has to be on the table. And I believe that we're going to get some decent insights when we have a conversation on that. In terms of distribution of funding, Nigeria, just like the rest of the world and even Africa, fintech is still commanding a significant share of the total tech startup investment, about 60% of the total. Interesting areas that are also coming up there would be logistics and transport and ed tech, which is very interesting. When you look at the Africa scenario, the other sectors that are driving funding are around energy and logistics. So logistics, it seems that there's something interesting happening in that logistics space that we shouldn't take our eye off outside of fintech. But more importantly is also the fact that payments also shows here as a major funding area when it comes to fintech. But while we continue to invest in payments, not because it's saturated or, because we think there are too many people playing there, we still think that there are problems to be resolved in the payment space that we just haven't quite addressed. There's still a lot of headroom for growth in the payment space. But then as you think about it in Nigeria, lending, for any economy to thrive, the credit system has to work. The credit system, gives a significant multiplier effect, to the GDP growth, to the growth of commerce, to the growth of businesses. So we think that that's also an opportunity area that we definitely can't afford to neglect. So it's good to see that it's coming in second, but there's definitely a lot of space to cover up in there. Now, when it comes to the fintech regulation, as we said earlier, there's been a lot of efforts by different regulators, to really understand what's going on in the fintech space and to more or less define regulatory guidelines and policies that would enable the sector. Now, depending on who you talk to, some would say that, oh, the regulation is stifling or crippling innovation. But it's a mixed bag, because in some cases we've had situations where the regulator has come in with a hammer and just said, you can't do this, you can't do that. And, whereas it could be a more collaborative approach. But what we've seen in recent times with the launch of the regulatory sandbox, we believe that the regulator is open to a more collaborative type arrangement where, we can co-create policies when we understand the solutions better. In Nigeria, there are different regulators that look at the fintech space. Of course, the primary one being the CBN, given their role in the financial services. But we also have the likes of the SEC, Securities and Exchange Commission. We also have the likes of the Federal Competition Consumer Protection Commission, who are equally interested in ensuring that the consumer or the customer, is not taking unfair advantage of. We've had practices in the lending space where people's contacts, people are reaching out to your contact and sending all sorts of, harmful threats or messages, and there's been a regulatory clapback on that to ensure that there's some sanity in how, lending fintechs are conducting their business. But basically, without going, looking at each of the regulations, I'd just like to point at a few of the regulations that we believe would be the game changers for the industry. So one would be around the open banking regulation. The CBN started working on that a few years ago. I believe they published now I would say a more structured and a more workable guideline for open banking was published early this year. And with that, we believe that there will be better avenue for the banks, the fintechs, financial services institutions, as well as other industries that want to better leverage the capabilities of financial services, to expand their business. There should be less friction. It should be easier to collaborate. And just to paint a picture so that it's clear to everyone, people that are not close to the sector may not know this. But today, if a fintech with a solution, right, for you to get your solution across to the masses based on the fact that they may have more than one banking relationship, you almost have to go and have a conversation with each bank, to integrate your solution, to ensure that, their customers can use your services. Now, that can be such a hurdle because if you go to Bank A, the requirements are defined along a certain lines. You go to Bank B, it's a totally different requirement. You go to Bank C. So that hurdle, just makes it very expensive to scale your innovation. It makes it very difficult to get, more users on your platform. But with open banking regulation, that minimizes that because now there are standards. There's proper definition of the sort of services that, banks or other fintech players can expose. There's also a proper framework around how to manage the customer's consent. Because while I can give you access, consensual access to my financial records, I should also be empowered to revoke it at the end of that business relationship. So before now, if you want to take a loan from, any of these companies, you get requests like go and print 6 months bank statements and things like that. Part of what open banking resolves is the ability for you to share information in a safe and secure way without necessarily, leaving sensitive data behind. So open banking is resolving that. Another important thing that I think is also interesting is the regulatory sandbox, which CBN has been working on. The latest information that we have on that suggests that, we have a few fintechs that are now being onboarded, and hopefully this would also spur and catalyze more growth. What the regulatory sandbox essentially addresses is giving fintechs or operators a safe space within which they can launch their product, reach out to a defined customer group. The details of that would always be worked out with the regulator. So, for instance, regulation can say you can operate freely for X period,
at a cap of, say, 1 million customers. And what this does is it allows the fintech, it allows the regulator to really study and understand, the operations of that fintech, understand the risk, understands the failure without necessarily having exposed this new service across the entire market. So these are some of the innovations that we definitely think will catalyze growth in the industry. I'll move on quickly to some other recent things, not so positive, but again, I think there's context in everything. In recent times, we've heard about, fintechs shutting down. Some of the headlines even sensationalize this to say, oh, so party has shut down after raising 45 million investments. Yes, so without necessarily calling the names or getting into the details of that, I believe that a thorough investigation can seek to define whatever the error is. But the one thing that I want to say is that, look, it's not a new thing that there will be failures within a startup ecosystem. Statistically, people that invest, everybody knows that you don't expect 10 of 10 to succeed, right? So some of these things happen. In the same vein too, it's a learning experience. People also pivot. It's possible you're not making headway in that business line, and then the business can decide to pivot from that. And in certain cases, there's just no way forward. And yes, the sensational news will come up. But while there are fears that this may cause or reduce confidence in the market, I personally don't think that it has gotten to that yet. I think it's a natural evolution of the space. It would, of course, inform the need for better regulation. It would inform the need for better corporate governance. It would inform the need for better risk management. So it's still a learning process. I don't think it's at the point where we then say, oh, the whole thing has been a scam all along, as you'd see as some of the sensational remarks you get online. So moving on from that to the last segment, which is the outlook for the sector. And it's just going to be recapping some of the things that I've said earlier in terms of where the focus should be in the coming years. Regulation would need to continue to adapt, to catch up with the developments in the industry. Regulation would also need to be more innovative, seeking to work hand in hand with the fintechs to drive innovation. Open collaboration. We expect to see more open collaboration enabled by the open banking regulation. Artificial intelligence is the one thing that we can't run away from. It's been making the headlines since last year. There's going to be a lot more infusion of artificial intelligence in enhancing operations, reducing the cost of service delivery, enhancing various aspects. So whether it's in investment and asset management, where people are leveraging artificial intelligence for advisory purposes. Of course, there will be some caution, some care around this, but we're beginning to see some fintechs investing in this. Regional expansion, we think, would also be a significant area of focus for a number of fintechs as they grow. Investment, and I would leave that point to when we discuss, but the point I make there is the outlook for other funding sources beyond just the foreign investments. The question is, how can we organize such that Nigerians, Africans can also play a more active role in driving fintech investment? And of course, the outlook around the next service frontiers, which I had said earlier, lending, insurtech, investment or wealth tech, as the case may be, beyond just payments. I believe that there's going to be significant opportunities in other frontiers of growth apart from payments. Thank you.
Thank you, Mr. Asuni. Please let's keep the round of applause going for his wonderful presentation. Mr. Asuni, I think I speak for everybody when I say Mr. Asuni has set the tone for today by giving us that fantastic and comprehensive expose. He has talked about geopolitical considerations, he has talked about regulatory development and financing trends. All of these things are things that I'm very confident our panel will be able to shine more light on as we proceed with today's program. And with that in mind, I would like to introduce our first panelist. Please put your hands up together as we welcome Ms. Yvonne Johnson to the Yvonne Johnson is the co-founder / CEO of Indecina, a fintech infrastructure startup. She comes up with over a decade of leadership experience supporting executive management on strategy within financial services. Most recently, Yvonne led the strategy team of a Tier 1 Nigerian banking group. She received her MBA at the Kellogg School of Management, where she graduated on the Kellogg Dean's List and was a recipient of the Donald P. Jacobs International Scholarship. An honors graduate of the University of Toronto, her previous work experience includes Merrill Lynch Investment Banking, Diamond Management and Technology Consultant, as well as Community Lab in New York, where she was the Director of Process and Executive Strategy. She worked directly with the CEO of this non-profit organization to define their overall implementation strategies and negotiate partnerships with local development agencies. Yvonne is also an early-stage investor, advisor in Pan-African technology startup, notably Andela and Flutterwave. Please put your hands together for Ms. Yvonne Johnson. Our next panelist is Mr. Olufemi Shobanjo. Mr. Olufemi Shobanjo is the head of the Broker-Dealer Regulation Department at NGX Regulation Limited, a subsidiary of the Nigerian Exchange Group, PLC. He has over 17 years of professional experience spanning across corporate and commercial law, compliance and regulation, banking and financial markets. Prior to the exchange, he worked for a couple of leading financial institutions in the United Kingdom, including Anglo-Irish Banking Corporation and HSBC Global Banking and Markets, as part of the Compliance Advisory and Monitoring team. He holds a law degree from the University of Birmingham, United Kingdom, and a master's degree in the International Commercial Law from Cardiff Law School. He is a member of the Chartered Institute for Securities and Investment United Kingdom, an associate of the Chartered Institute of Stockbrokers, an associate of the Institute of Capital Market Registrars, an associate of the Institute of Chartered Secretaries and Administrators of Nigeria, and a member of the Nigerian Bar Association. Please put your hands together for Mr. Olufemi Shobanjo. Our next able panelist is Mr. Mobolaji Adeoye. Okay. Mr. Mobolaji Adeoye served as the managing partner of Consonance Investment Managers, an investment platform primarily focused on Africa. The firm provides invaluable support to early and growth stage entrepreneurs as they strive to build enduring businesses. Mobolaji passionately believes in the transformative power of entrepreneurship as a catalyst for national development and emphasizes the paramount importance of the right risk capital to bolster these efforts. He holds a position on various boards, including Pezesha Africa, MDAAS, FEX Commodities Exchange, NG Clearing Limited, and Talent Exchange and Infrastructure Limited. Mr. Mobolaji Adeoye. As you can see, it's a very full panel. So our next speaker is Mr. Tomiwa Aladekomo. Tomiwa Aladekomo is the CEO of Big Cabal Media, which publishes the tech and youth publications Tech Cabal and Zikoko. Big Cabal is building the next generation of African media brands and creating some of the most exciting original content from the continent. An experienced executive, Mr. Aladekomo has worked extensively across media and marketing roles in Nigeria and North America. He has taken Big Cabal through a transformation that has made it one of the most exciting news media companies on the continent, telling African stories in depth and innovative and fresh ways. He is passionate about Nigeria and Africa as a whole. This passion fuels the pace-setting work it does at Big Cabal Media and also as a board member of the Africa Tech and Creative Group, which is working to ensure that the implementation of the AFCTFA Continental Free Trade Zone Act works for tech, creative, and small businesses communities all over the continent. Tomiwa has a BSc in Business Administration from the Boston University and an MSc in Anthropology from the Columbia University, New York. He is a fellow of the Archbishop Tutu Leadership Fellowship run by the African Leadership Institute. Mr. Tomiwa Aladekomo. Thank you. Our last panelist is Mr. Ladi, who has given us the market trend. I would like to welcome him back on stage. And ably moderating this session is Detailed Commercial Solicitors own Temidayo Ajayi Bello. Temidayo Ajayi Bello is a partner at Detailed Commercial Solicitors and leads the firm's corporate and commercial practice unit, as well as the capital market and private equity teams. She is an astute commercial lawyer who has a passion for excellence and goes the extra mile to meet clients' needs, as evidenced in a recent award by the ESQ Nigerian Legal Awards as an Outstanding Young Professional, year 2022. Temidayo commenced her corporate and transactional practice as a solicitor at Detail in 2016. Her dexterity on transactions and in client management accelerated her growth within Detail, which culminated in her admittance to partnership in September 2021. Temidayo has considerable experience and knowledge of private equity transaction dynamics, with experience advice on various transactions across the private equity value chain. She regularly advises startups raising funds and also has advised various funds, both local and international, on investment or divestment of their interest in Nigerian companies. Temidayo Ajayi Bello, ladies and gentlemen. In as much as I'd like to continue speaking, I will hand over to Temidayo to moderate this session.
Thank you, Ibrahim. And thank you very much, every member of this panel and everyone else here. I just think that we should perhaps get to know you guys a bit more beyond what has been read about you. So, just a little icebreaker. And the question is, if you could pick one superpower, what will it be? Bolaji.
Do you know X-Men?
Yeah.
The professor? Yeah, he can make people do what he wants.
Professor
Yeah,
X.
so we'll start with the civil service.
Yvonne.
I think knowledge is a power that allows me to understand what somebody else is thinking.
I mean, we have a lot of Professor X's here.
No, it's a great superpower. I think Bolaji is actually like he set a tone that's a bit hard to get around. So I think knowledge. There's a thing in what is it? The Hitchhiker's Guide to the Galaxy, where there's a way you point something at someone and you can see the world from their view. You can always see the world from the other person's perspective.
view.
It'd be fantastic to have that.
Great. Olufemi.
I think for me, it will be the ability to move or travel into different time zones. So you can go in and come back and
To fix things, right?
exactly. You can go into the
Great.
past and fix.
Great. Laddie.
Yeah, I was going to say time travel. I initially was going to have mind reading, but then I think I'd rather be able to influence beyond reading it. Let me influence it. But since you said that, I thought time travel definitely.
Well, I wish I could time travel as well. So, I mean, we're a room filled with time travelers and mind readers. All right. So just to get into it, right? We've heard everything Laddie has said, and how there's been, should I say, some growth, some friction. And this is a question to everyone, so I'll leave it to you guys to decide who would answer first. These regulatory trends, right? how have these trends basically impacted the investment landscape? So if we say from the timeline Ladi puts on his presentation, basically from 2018 till now, how do you think these trends have affected the investment landscape?
Yeah. So I mean, I'll try to answer that. I mean, I think we've all seen, with the need for better services. It has spurred a lot of entrepreneurs, particularly in, and has attracted a lot of capital globally, right? But as usual, right? I mean, it's very, people often say that regulation often lag innovation. So it's an issue that is not going away anytime soon, right? Because, when you think about the concept of even sort of building trust, right, in any environment, right, the legal and regulatory environment is very, very critical for that. But not just even that, right? I mean, even if you're trying to create a market, right? I mean, we often look at market creation in terms of key people. So, required market, the social capital required for that market, which is where the legal environment, right, sits. Is real assets, digital infrastructure, and financial services. So as you can see, even when you're trying to create a market, it's important to even understand the regulatory environment if it's ideal for that market. And if it's not ideal for that market, you have to sort of, partner with lawyers, right? Particularly innovative lawyers, to create the ideal legal framework to ensure that that market is not only sustainable, right, but also protects, customers and stakeholders.
Great. Yvonne, do you have anything to add?
I think when we think about that timeline, it's important to actually I think there's kind of two periods actually, if you think about it, right? Because when you think about kind of COVID and then the recovery, so 2021 was an outlier, funding and whatnot. COVID really, it really drove a lot of digitalization, right? And fintech in the space that I'm in, saw like, a huge, kind of growth, right? But then kind of 2021, 2022, or let's say 2022, 2023, there's a lot that's been happening, right? It's kind of this reset that is happening, right? And I think when you think about the regulatory environment as well, again, just looking at fintech and some of the policies that have come out is coming out in that period, right? So it's important to kind of distinguish between those two time periods. And I think in terms of trends, and, Ladi alluded to it, and I'm sure we're going to discuss more, is that you're also seeing kind of customer behavior also driving and influencing some of that, right? In financial services, for example, one of the things that we're seeing is that all of us are buying our financial products from different providers, right? It's not just I have, an account with a traditional bank, but now I have accounts with kind of fintechs and whatnot, right? And I think lastly, data is, that is now kind of front and center. Just from the technology itself and just kind of the scale and the speed of kind of innovation that is coming up, right? And of course, regulation having to kind of, keep up, right? So definitely there's a lot happening, very eventful and whatnot. It's just a case of saying that, how can we make sure that regulation is not stifling innovation, but, also having to make sure we have a healthy ecosystem.
Thank you.
Okay. I'm going to expand the timeline a little bit and say, Balaji talked about market creation. I'd say probably a decade ago, between the CBN and NIBS, you saw a lot of action that actually enabled a lot of market creation. Yeah. So interoperability between banks, a lot of CBN's regulation essentially kind of opened the floodgates and allowed sort of the fintechs to really sort of like start to establish themselves. In terms of what drives growth, I think that was a really strong period from a regulatory perspective. And I think our CBN, for the most part, has been a driver of innovation in a number of ways. It has created a space where people can be ambitious and can do things. I think about 2-3 years ago, you saw a series of sort of adverse regulatory actions, CBN by the SEC, against crypto, against a number of the fintech players, whether it was in payments or credit or whatever it is. And I think the way that affects investment is it affects investor confidence. And so, take a step back and let's see what's happening exactly before we put money in. So that, a little bit adverse in terms of its effects, not major, because like Yvonne said, I think the big drivers of innovation, the big drivers have really been customer demand, technological capacity, hungry entrepreneurs, like Yvonne, very, very aggressive entrepreneurs, like seeing problems and attempting to solve those problems, and attempting to build big businesses because they think that there's a space for them to do that. So I think those have been the biggest drivers. Regulation, it plays its part, but I think that demand, the technological capacity, I think moving forward, you're going to see what next year, next couple of years, AI is going to drive sort of a new wave of innovation because the technology is there. And so we're going to see what it is that we can do. Customer demand, which Ladi mentioned in his presentation, customer expectations continue to evolve. That pulls people into the space, it pulls innovation, it pulls capital, basically. But I think regulation, I'm sorry, I'm moving a bit forward looking here now. I think regulation will also be interesting in the near future. I think this administration, the new Minister of Comms and Innovation and Digital has done a roadmap that's ambitious. Sorry, I'm stepping ahead of you. But I think that will also be interesting. I think regulation can create markets and it can draw investment, but it's by creating the conditions. So it'll be interesting to see how
it pans out. So I mean, and I'm sorry because I think Tomiwa has taken that question and gone really far with it. So I will ask you, Femi, a different question. And so as Ladi had mentioned, we've had all of these regulations, and I know the NGX has also, put in place this technology board, right? So a key question that, I think it's important to just ask is in terms of implementation and then stakeholder engagement. So in putting together the board, right, how involved were the stakeholders and how far have we gone in terms of the implementation of the board?
All right, thank you. Can you hear me?
Yeah, we can.
All right, perfect. I think what has been said is obviously innovation comes ahead of regulation. I think it's very important to establish that very clearly. And from what we've seen, some of the trends we've seen is the innovators would go into uncharted territory sometimes, and the regulators will try and roll them back and say, listen, you're bringing something out. These things can sometimes it can be good or in the bad. That's innovation. And you've seen some of these fintechs or these innovators, the regulators getting them back to say, come and get this license or come and get this registration. Because they've gone out and they're not registered. But coming back to the tech board was sort of a reaction to some of the fundraising that we were seeing. Like you said, COVID was the major accelerator, so a lot of funding coming. And as a local exchange, a lot of that business is obviously, that funding is being done offshore. And the exchange is a major infrastructure in terms of raising capital. And so we wanted to be in that space as well. We wanted people should be able to raise funds, in the local market. And so a lot of engagement with some of the key players that started, like rolling out ideas. And of course, the key thing they would say is the rules and regulations of being listed is too stringent. And so a lot of these startups or even the big tech companies can't participate in the market in the way that it's structured. And so they would want a separate regulatory standards, separate requirements and all of that. And that's where the thinking for the tech board came in. And I think there was a lot of engagement even with the SEC as well. Don't forget that the SEC is the Securities and Exchange Commission, plays a major role in the capital market as well.
Yeah.
And so the tech policy rules, which was approved in December 2022, still relatively under a year.
Yeah.
It's out there. It's designed to encourage these tech companies to come into the market, raise capital from local and foreign investors, but also in a way that brings transparency, in a way that brings a certain level of governance. So we know that startups don't usually have the ideal governance. So it's an opportunity. We haven't seen a lot of deal flow in that direction yet. It's still early days.
Okay.
And we're hoping that over the coming months and perhaps years, we'll see a lot more activity in that space.
Would stem from your presentation, right? And all of these regulations that you had sort of accumulated together and said, this is it. We've had some positives, some negatives. So back to the original question, which is how I know we had that table that showed how much investment had come in, but what would you say? Would you say that regulation has really influenced the drive for investments in this technology company in Nigeria?
Right, thank you. I think the way I like to see it, if regulation is indeed driving investment in Nigeria, I think there's regulation happening, right? And there's investment happening. Now, I wouldn't say there's a direct correlation. What I can just say is that regulation can indeed enable, and in some cases, it can cause certain levels of uncertainty. What we had with the regulator, just overnight slamming and saying, you can't do this anymore, or making certain pronouncements that almost turns a business that has been operating for a while, like a switch button to just say stop. We also had similar cases with the Competition and Consumer Protection Commission also just saying stop. I think that when you make such abrupt regulatory interventions, it can affect confidence. But I wouldn't say that the growth we saw in the prior years was also necessarily because some regulations came in place, the other speakers have said earlier. It's just been a lot of other factors that have come together, our innovative entrepreneurs going out there, sourcing capital, people are doing a whole lot of work to drive this investment. So if anything, if it's going to grow again, I think it's going to be as a result of the effort of our entrepreneurs really going out there, demonstrating the opportunities in the market, and regulation will just be one of the things that the investors may just want to consider. Am I going fully in? Am I staggering my investments? Am I approaching a wait and see? Or am I going all in? So I think that's where regulation comes in. It can moderate things, but I don't think it would necessarily, pull the plug.
Thank you. And I know we've said so much about regulation, and so during Ladin's presentation, he spoke about future outlooks and collaboration. So the need for collaboration in putting together these regulatory reforms. So just to go to Tomiwa. So I know that with the Startup Act, there was really this drive. I believe it was like the stakeholders that really drove the act, right? So my question really is, what would be your view on the need for continuous stakeholder engagement? So I know that a lot of these regulators sometimes pull together the stakeholders in order to push out regulation. But it would be useful to know how involved stakeholders need to be in this process, and how much, I would say, how much power they have in ensuring that their needs are adequately reflected in the regulation.
Okay. I have strong views on this. The fintech industry is, as an industry, and our tech industry across the board, absolute nonsense as regulatory engagement as an industry. The smartest players and the players who are furthest along are fantastic at regulatory engagement. And they all have their Abuja people, they all have their, and so, like, if you're a big player, you're serious about this and you're engaging on a constant basis, and you're advocating for things that work for you, not necessarily for your competitors. As an industry, though, we're doing a really bad job of it. And if I compare it with something like the banking industry, where you have a bankers committee, you have an annual bankers committee sort of like forum where they're just like annual retreat, with regulators, with everybody coming in. So as an industry, I think there's a lot of work that the sort of, again, the fintech, but the broader tech industry needs to do to ensure that they actually are doing sort of regulatory engagement to ensure that the rules that are being put in place, the regulation that's being put in place actually affects, the industry positively as a whole. The Startup Act was a very abused process by, I would say, a limited number of stakeholders. I think it was very inclusive in its intentions and its ambitions. But once again, I think the industry could have done a better job and should be doing a better job post the passage of the Act to ensure implementation. And so I think it's just something that as an industry, they haven't got right yet. There still needs to be some putting them kicking and screaming into, and perhaps it's just understanding that, government isn't like some faceless entity over there. It's actually something that you can engage with. Again, on a forward-looking perspective, I think that the recent changes, the recent appointments into that industry, a lot younger people with a bit more industry experience and coming out of the industry, will change the level of engagement that you see over the next few years. But yeah, there's a lot of work to be done. Yeah.
Thank you. So you touched on something very important. Nigeria is blessed with laws, right? And it's the implementation of these laws and regulation that sort of, I would say, sort of bites, right? Or the lack of implementation or the over-implementation sometimes. So I guess this question really, or my next question will go to Yvonne, because since I know you do a lot in the open banking industry, and since the CBN introduced this open banking guidelines, right? How well have these guidelines, been implemented? How well has it shaped, the open banking industry?
It's a good question. And the short answer is that there is some traction, maybe not enough, right? So to Tomo's point, there was actually, engagement personally with CBN, try to get the open banking policy implemented and how it's been implemented. But one of the, when you think about open banking policy and any kind of data-related policy, right, they're kind of the data owners, right? And they're kind of the institutions. Institutions that have the big data pools, right? And in this case, it's the banks, right? And so yes, we have a policy. It's an explicit policy. It's great that it's out there, right? Providing clarity around, how these custodians of data, handle the data and whatnot, right? But what we're seeing is that some of the banks have started to publish their APIs, right? Not all of them, right? And certainly, fintechs like us would really love if they can move faster, right? But the policy is there. It's a great policy. It provides clarity around the industry and whatnot. And so now when we talk about the implementation, I'll say the wheels are slowly grinding, right? It will be great if you have kind of, a lot of the banks out there starting to publish the APIs, you can pick them up. I think we would get there slowly but surely. But relatedly, I think when you think about implementation, Ladi alluded to it, the sandbox policy. I know that the CBN certainly had a call for applications. I would say they're in the final stages of choosing kind of the first cohort, right? So it's impressive to see that kind of traction from them. I think the other one that is also really interesting is the Nigerian Data Protection Act, right? It's been interesting to see how, fintechs like myself have just, by themselves been self-motivated to kind of get that certification. It's an annual one, right? And there's reasons for that, right? We're all motivated to make sure that we have that so that we can, try to, implement kind of, data-driven business models. So that one is actually an interesting one where, the policies out there. In fact, I think there's kind of the second phase of it. There was an old one. It's now been replaced. But you're seeing fintechs just by themselves going out and getting those, certifications, right? Especially when you realize that we're now in this wave of kind of AI and ML and everything around data.
Thank you. So I really just want to ask Bolaji this next question. And it's from the perspective of legal compliance. So as an investor, you would typically do some level of due diligence in the entities that you intend to invest in, right? And we understand how important that is. But the thing is, from your experience, what do you think the players in the tech ecosystem, particularly the startups or the tech companies, what challenges do you think they face in terms of regulatory compliance? And Femi, I think you will be able to give us your view on this, and Ladi as well.
Yeah, I actually do agree. I think Tomiwa said something about the fact that the players have to do a lot more engagement. I do agree with that. The regulators in Nigeria, I mean, if you think about it, I know folks often give them a hard time, but there's a lot of startups actually get away with here that you won't get away with in the US. As a matter of fact, you probably go to jail, right? Right? So the regulators in Nigeria are actually quite friendly, right? The critical thing, number one, is that startups have to understand the regulations that govern what they're trying to do. Oftentimes, people don't have the luxury because, they are moving fast. Folks don't have enough resources, but I think we do, obviously we're investors, so we get folks like Details, right, on our side to assess that market. I told you that, when we sort of look at any company, we sort of look at it, we evaluate them on 5 key pillars. Are the skills available to scale the company, right? What the legal environment, right? What kind of infrastructure, both real and digital, right? And for this particular company, is the right financing available, right? So we look at across those pillars, so for us, I think it's really first education about what is on the ground. Then you can figure out if you need to amend, the rules. And it's something that we've also done, with 1 or 2 of our companies.
Okay, so I in summary, what you said is basically a challenge they face is the fact that they have no knowledge of the laws that govern them, basically.
Not everyone, but a lot of startups don't.
All right. Yeah. So, Olufemi, so from your perspective.
Okay. So I'm in a very peculiar position because I'm kind of like an accidental regulator, and also we're sort of self-regulatory. So we have regulated ourselves as we regulate others. And so we're kind of a friendly regulator. And so we do a lot of engagement, like I said before. In my own field, I've seen some of these startups come in where there's absolutely no regulation around what they're trying to do. And so the point about engaging with the regulators and engaging early is very critical, because you can go off and just be doing things in your own tandem, and then the regulator comes back and says, like you say now, stop whatever it is you're doing. Because the default by a regulator, this is not permissible. There is no law backing this. I don't understand what this guy is doing. So either I go to court. In some cases, regulators go to court, get a court order, and say freeze whatever account. Or, that's the default reaction.
Yeah.
However, if you were engaging at a much earlier stage, it's either the regulator will say, "Well, I'm sorry, you can't do it," before you even start, or this is how you need to go about doing it. And these are the sorts of regulations or things I would need to go and amend and put in place. So it's a challenging one for startup companies that are just coming into it regularly. But the most important thing I can say is you need to engage, and you need to engage early. And in some cases, you're dealing with multiple regulators.
Yeah.
It's a very tough environment that we're in. You might find that you have to deal with the central bank. You might have to deal with the Securities and Exchange Commission, and you don't know anybody in Abuja and all that. Maybe a detail might be able to handhold you through that process. But it's much better to engage early than to go down the line. You're dealing with people's investments, you're dealing with accounts, and then someone says stop. And in some cases, you're dealing with litigation, and which can be very expensive and which can go on for a long time. And no one wants to take a regulator. No one wants to be in court with a regulator, frankly. That's one of the things. The other thing I would say is inconsistent policy. Okay, that's another thing that we find oftentimes in this part of the world. There's a rule or regulation that says this today. I don't know if you've seen, some regulators, let me not mention names, can issue circulars or guidelines on the same subject maybe in a month. Like you might see 3 or 4 different circulars and they're saying different things. And so it's like, how do you navigate that? Clearly, this industry does not like regulation. They don't actually like being regulated. And that's what I've come to realize. They've said it to us when we engage. They actually don't like it. So they rather just operate in a vacuum. And so if they can organize themselves, like this gentleman was saying earlier, I've seen that they are setting associations. I've seen the FinTech Association of Nigeria. I've seen other things where they can mature and they can be bold enough to have forums with the different regulatory agencies that affect their different business lines, and they can share these pain points and all of those things. I think let me just stop. Let me just stop at this.
All right. I think on this topic, I would like to sympathize with the startups. And for one thing, because he touched on it, it's the important point around multiple regulators, right? The DNA of your typical startup comes with the innovator. More often than not, a technical person or, experience in the service area. In rare instances, you have people with extensive banking experience then coming to but that's not the norm, right? You have most times you have people that are good on problem solving, and they go in first. And dealing with multiple regulators can be such a hassle, but they have to, right? Now comes the part about organizing as a team. Interestingly, the FinTech Association of Nigeria is also running a FinTech Week around this period. But my question is that, does FinTech Association of Nigeria represent the FinTechs in Nigeria? Yes, no. I'm not.
I mean, maybe we should get a response. Kamara, what do you think? FinTech Association of Nigeria.
I feel like I should pass.
No, I don't think you.
But it's. I mean, look, he makes a point. It's are the most active, are the biggest fintechs members. I don't know. The engagement is not as deep and it's not as robust as it kind of should be. To be blunt.
Yeah, thanks for being blunt. It wasn't my idea to put you on the spot. I also don't want to be on the spot. But the point I make is, right, there is opportunity for the fintechs to better organize under whatever umbrella. If there's a need to establish something, if there's a need to really get involved and begin to play a more active role in the established association, that can happen. But I also think that there's a role for the regulators. The different regulators also need to organize, right? In Singapore, there is a single authority, Monetary Authority of Singapore, MES, that drives regulation across board, whether it's on the on the central banking policies, whether it's on the SEC related policies, and because of that, when they come up with initiatives like the sandbox, which has been replicated in Nigeria now, it is not a CBN sandbox. It is a regulatory sandbox where fintechs can operate within safer parameters where they focus on their innovation, albeit within defined parameters. Okay, you can operate up to a limit of, say, a financial threshold, a customer-based threshold, a market segment, whatever the parameters can be defined, and the fintech can operate freely. Regulation can observe and evolve such that at a point in time, regulation, the fintech, everybody has had the opportunity to learn, and then the policies can be more robust, can be more representative of the findings from that joint endeavor, rather than just building bricks. I don't know if other regulators are part of the CBN sandbox, for instance. I'm not sure, but that would be something for regulators to also come together and make it easier for the startup community.
There are different sandboxes here. I know SEC has one, CBN has one, etc.
Well, I mean, I hear you. We need collaboration on the regulators level, and then we also need collaboration for the stakeholders in the the main players in the tech industry. So, but I'd like to move on to something else. It's a different kind of regulation. It has been introduced recently, and it's about ESG. ESG is the main thing now. So, Tomiwa, I'd like to know, at least from your perspective as a startup company, in terms of how increasingly important, so maybe not to focus on the environment because of what it is that you do, but then basically the social and governance, particularly on the governance aspect. How do you think, like, investors, so we'll speak to the investors in the room, but how do you think that investors are taking this into their decision-making process? Like, how do you think that, having these tech companies comply with these stringent requirements, which we've seen sometimes, how do you think that it's influencing their decision-making process?
So when I think about ESG, as a term, as a trend, as a whatever it is, my first reaction is, concern us. Like, it's just like there's sectors of the tech industry where there's opportunities. You can do carbon credits. You can there's interesting plays that you can make. But ESG as a trend, and it's great, it's fantastic. It's happening over there. Now, governance is a slightly different thing. We've seen some of the headlines that Ladi uncharitably characterized as sensational around startups failing. And startups fail. It comes with the territory. The investors know. It comes with the territory. Sometimes after raising eye-watering amounts of money, it comes with the territory. So governance is definitely becoming a bigger issue here. Startups fail. Fraud happens. Errors happen. Startups fail for a number of reasons. You're going to see bad players in any market. You will see bad actors in any market. Where investors can create guardrails with stronger governance, they will create stronger guardrails with governance. As a startup, I have the misfortune of being the kind of startup where from the day I joined, we had a board. We've done quarterly board meetings, as Detail knows, from day one, executive compensation gets approved by the board, we've had governance from the second at least the second I stepped into the company. So for me, sometimes I look at some of these headlines and I think, yeah, these investors like no, I mean it's like literally when if the founder is paying himself 10% of your raise as annual comp, then nobody is watching the tail, nobody's watching the business. So I think that it will get taken even more seriously than it has in the past. Due diligence is going to get tougher, and for good in that. Yeah, you want investors to do substantive due diligence, but at the same time, having gone through due diligence, I can't imagine it getting any tougher. I mean, like seriously, like it was medically painful. So I think it will become a bigger issue, just because of kind of the concerns. But I do agree with Laji's point earlier on that all of this is part of a maturing ecosystem. You're going to have your busts.
Yeah.
And there's no strong tech ecosystem globally, whether it's Silicon Valley, whether it's China, where they've not had their bust. I mean, like, I'd rather be Nigeria right now than China. Like, China is serious regulatory pain for their biggest and most successful startups, not even for the early stage ones. So, yeah, I think a lot of this is just part of the maturing of the ecosystem. Yeah.
Thank you so much.
So just to add to that, and I mean, from a founder perspective, a lot of the kind of ESG activity doesn't concern us, but it's coming from an investor now having all these metrics, ESG metrics. So you don't always an ESG founder. I don't know. But to be fair, I find that it seems to be driven from their elements as well.
Yeah.
But the governance part, I mean, and that's the top issue for our ecosystem, right? Interestingly enough, like I want to say that it's not just kind of investors that are kind of creating some of these models, right? So I'm a fintech, and of course, having to interact with the CBN at some point in time. But even some of the partnerships, especially with the banks, in that engagement as well, there's also some diligence that happens. You'd be surprised kind of how that process is rigorous and more so than what kind of a typical kind of investor would administer. So that's also an interesting kind of angle where that whole idea of governance is topical for us right now. It's certainly very important. You don't get the level of skills because you have the right governance in most cases. But there's also a part of it that is, yes, driven by the investor, but on the partnership side, whoever you're going to partner with, and that happens with
Correct.
their diligence process also.
Great. Balaji, do you have anything to add?
I think, Tomura and Yvonne, I've answered it excellently. I mean, when we think about ESG, we think about, aside from the ESG industry, right? I mean, we think about what is the philosophy behind ESG, right? And what is it trying to achieve, right? So, you're thinking about governance. You should definitely have that. And at the end of the day, you shouldn't harm the environment, right? While you're trying to make money. I think those are sort of fundamental things that are just essential for a good company, right? Now, where the complications arise, right, is that we do have an ESG industry, and when you have an industry, then all the bullet points will go from like 5 to 100, so that people can justify their role. Initially, our ESG was actually LP driven. And a lot of the startups are just kind of like, these guys have come again, with their list. But what we're trying to do now is to make it useful for the startups. For example, right, gender inclusivity, right? Sometimes folks don't know that they probably have maybe out of maybe like about 20 folks, maybe they have like 2 women. So you can see that progression in staff and also in leadership. So those type of things, you just have to make it, a bit more useful for startups. But I don't think ESG is going anywhere. The industry, though, may die down a bit, but the philosophy behind it makes everyone better.
Thank you so much, Balaji. I think there's a question or there's a topic which, if we don't bring into this room, would make no sense. So we're talking about FX policies this year. Someone, I see your face.
Would you like Would you like us to all start crying?
So, I think So basically, I just wanted to know, like, from an investor perspective, and Ladi, I'd like to hear your views on this as well. From investor perspective, like, how have these policy changes? So I know that you've had to put in funds in entities in dollars. So how has it impacted your? I mean, what are you expecting from?
Yeah, I mean, yeah, FX in Nigeria, right? I mean, is an added layer of complexity for investors. Particularly, I mean, if you think, I mean, the $5 billion I think that came into the venture capital industry, I'm sure most of it is USD or euros, right? Not necessarily naira. So it's incredibly difficult, so I'll give you an example. A lot of startups were presenting their financials, right? Probably about a year ago at 400. Now the currency is at about 1,002. Right? So it's difficult, right, to keep up with that. That's the reality, right? But it also sort of opens up the conversation that we have to build, we have to sort of ensure like the local financing industry, right, participates in both private equity and venture capital, right? Because if you think about it, right, if currency devaluation is upwards of 30%, right, and the expected return on a lot of investments, private equity and VC, the long-term steady state return is 25%, right? You can make it on a Naira basis, but you can't make it on a USD basis, yes, right? Yeah. So it brings back the question, right? Are those products viable products in Nigeria, right? I mean, the math may not necessarily work. It may work for VC because you can potentially, grow faster than a devaluation, right? But for private equity, for infrastructure, for private credit, those may have to be local currency denominated products, in our view. So yeah, it's an added layer. And the way we solve it is that we diversify across Africa.
Okay.
Right? That's sort of like one of the key ways that we solve it at a portfolio level. Then we also solve it at a company level by focusing on market creating innovations, right? Because in reality, the only types of companies that can grow faster than devaluation are companies that are price givers. Yeah. They have a certain level of monopoly, right? Otherwise, it'll be very difficult to keep up. Yeah.
Okay. Yvonne?
I think if you take a step back, right, that mismatch, so to speak, kind of has always been there, right? And there are different reasons for it, right? So you're a startup in Nigeria, most of your receivables, most of your revenues is in Nigeria, and then, the funding was dollar denominated, right? So that mismatch has always been there, right? What is now making it worse is just some of the pressures, right? Of course, the deval, and then of course there's a global context, right? Higher interest rate environment, high inflation, right? When you think about kind of the high interest rate environment, right, it makes VC as an asset class, even that pool of funding has kind of dried up, right? Because the hurdles are much higher, right? Now we see a focus on kind of, sustainable business models. No one is, willing to fund this kind of growth at all costs. It's now about profitability and whatnot, right? So the mismatch has always been there, but like Bolaji said, what's happening right now is just kind of more pressures, right? And for us as founders, right, there's just now more pressure to kind of build sustainable businesses, build businesses that can meet the growth hurdles, right? And so you just really have to be more thoughtful about, what business you're in, what the business model is, where you're going to get that growth rate, to match, kind of the new hurdle, right? So I mean, it's an interesting time. A lot of us are losing hair. That's why he's wearing a cap. But that mismatch has always been there. It's just kind of the pressures are now just higher.
I'm wearing a hat so you can see the hair I'm losing. I have like a few angles. Apologies, covered some of what I might have said, but I think just to pick up from where Yvonne left off, a really key thing that I think you're going to see start to change is what markets that founders are serving and who it is they are serving.
Yeah.
Because I said one of the biggest drivers of our industry is hungry entrepreneurs. And the really big thing that hungry entrepreneurs do is they adapt. And if making your revenue in Naira is going to make it impossible to make your numbers, you're going to have to make your revenue in dollars. And you're not going to do that by selling in Nigeria to Nigerians. And so I expect that 12, 24 months from now, the services that our fintech industry provides, the markets that they serve, will shift significantly. And there's a very big hurdle to build a global facing product rather than a local one, because you're solving a problem in Nigeria, then all you need to do understand is Nigerians and their problems and CBN or whatever it is. You're trying to solve a global problem, like you're trying to serve customers that you're not seeing on a day-to-day basis and that you might not have an understanding for. But I do trust that we've got hungry, ambitious, and very, very capable people in here. So I expect, looking forward 12 to 24 months, to see a much bigger portion of our startups at least attempting to serve global markets and to sort of and even for people like us, I mean, I'm a media business, but for the last 2 to 3 years, like Yvonne said, these problems have existed. We've always had here's our dollar revenue target on an annual basis. And year on year, it's just, we cannot possibly generate 100% of our revenue in Naira because we're venture backed.
Yeah.
We cannot generate the returns or the growth rates that's required by selling purely Naira-based products, essentially. And I think that a lot of startups will adapt in that way and will think about that as well. But I will say that it makes our board there's 2 Americans on our board and 4 Nigerians. It's very amusing explaining to the Americans exactly what it is that's happening, because the idea of I think we're not using parallel market rates, so it's not actually myself had to call me to order. It's no, we're not using 1100 to report at the moment. I think it's still 800 and something. But explaining even 100% devaluation between May and September to your board members when they've never seen such a thing is fun, actually. To be fun.
Sorry, not to hog it, but I think, and we've kind of, not to tout our own horn, right? But I think that there has been precedence with kind of Nigerian founders and entrepreneurs kind of, figuring these things out, right?
Yeah.
I think when you look at, actually even at the Nigeria level, right, we've always kind of exported religion and culture, right? So let's not take that for granted. And then, down to kind of startups and whatnot, you look at like an Andela and their business model, right? I see a lot of the remittance guys, right? With what they're doing, right? They've taken advantage of the Jackpot wave, right? And been able to kind of implement a business model that solves for some of these things, right? And I don't have money to break. Okay, but again, not to tout our own horn, right? But just to also say that there has been precedence in terms of kind of Nigerian founders just being able to kind of figure this stuff out, and we just have to kind of dig into that well and do it all over again, because now is the time.
Okay, sorry, Ladi. Just before because so we don't run out of time, I'm just going to divert the question a bit, and then maybe you can then step in there. So, Olufemi, from your perspective, right, with everything that's been said, and there was something Bolaji said here about, local funding, local financing, what opportunities would the capital market, provide to startups? Now, and I'm not talking the unicorn guys. We're talking about, mid to medium-sized startups, those who have scaled a bit, right? What opportunities would the capital markets industry provide?
Thank you. All right. So I spoke about the tech board, which we launched in December. And I think maybe I'll just talk a little bit about that because it was designed for exactly this purpose. Obviously, it's a Naira board. And it's designed for startups that range between, I think, market cap of about 420 million for the startup segment of the market, of the board, on Naira. And there's a big tech segment of that board, which is for the big companies, which is about 42 billion. Again, we just need to have an operating record of about 1 year. And the requirements are a lot less stringent. Now, obviously, at the exchange level, what we've seen is that with the FX issues, FPI, foreign portfolio investors, what we used to see about 50-50 3, 4, 5 years ago, is now like 15% versus local. And so the local investors have stepped up, local institutional, local retail. We've seen the pension fund industry here is growing largely, and the asset management industry. These are the big institutional players that can see VC as an asset class, right?
Yeah.
We're seeing pension funds put in more than 10% because the market, the local market that is doing a lot better than it's been doing for a while. And so the tech bill is a solution that local startups can tap into. Like I said, 420 million naira, that's about 500,000 USD equivalent. So it's not that, I think for that size of startups, they can take advantage of raising funding from that market. And like I said, the regulatory requirements are a lot less stringent than the main board of the exchange. So that's a solution, right?
Okay. Well, hopefully it's a solution. Ladi, so do you have what do you think that what opportunities do you think that the capital markets can introduce, that's in terms of local funding for this tech company? So he's spoken from the perspective of the NGX, but then there are other things. I mean, I would imagine that you can raise, there are funds that are being registered in Nigeria, and I would think that tech companies should be able to access those funds. And then we have, I guess you have to be at a certain threshold to actually issue out notes, but what would, in your opinion?
All right. Thanks. I think when I look at the tech space, first, there is a lot of interest. There are a number of people that would like to participate. And from that perspective, I think that there's an opportunity to set up structures that allow people that are not necessarily operating at the VC or angel investor scale to still be able to, so it can be somewhat of a retail play, but I know that there are organizations that have been able to structure certain things that allow certain level of investments, to flow towards the startup space. So I don't know whether it's NGX that is going to drive that. I don't know whether it's other investment institutions that can come up. I'm talking specifically about the likes of Future Africa, being able to create a vehicle that can still mobilize funds at certain levels and aggregate to the level where we can still support the local ecosystem. But in addition to that, just to add, and this is my perspective, that regardless of where the funding comes from, whether it's Naira denominated, whether USD, I think the pressure remains the same.
Yeah.
The startups that, still need to deliver the numbers that make sense, because investors don't necessarily operate from the isolation of, a Naira market. It would always, the funds will flow to where investors get the best returns.
Yeah. So, I think that, a lot of products that we're seeing in the market is still somewhat targeted at high net worth individuals, and rightly so, because, venture in itself is more of a mean return kind of play because of the risk, so it's not as advisable to actually get retail players. to invest in one company at a time. Because that's kind of risky. So you're looking for them to sort of target mean return. So you want them to have like a basket, right? So I'll give you an example. In the US, I think I was having a conversation with someone. In the US, for example, right, the probability of having like an outlier, which is what you're looking for, is about 2%, right? So to hit an outlier, you need a portfolio of 50 companies, right? So if you're trying to provide access to retail players, you have to sort of do that math, right? What is that probability so that you can construct sort of like a basket of startups, right, across networks. So it's very important to sort of create something that target mean return, right? Because that's what you're trying to do. In the US, for example, I'll give you an example. The difference between median return and mean return is about 5x, right? And mean return assumes that you invest in all startups, right? But obviously, you can create like a sample of that. So it's very, so as we're we have to sort of be aware that that asset class, is governed by some level of power law. So you have to almost give people exposure to a basket, not a single company.
Okay, thank you. I think that we've had like a very, very interesting conversation here. I know that some of us on the panel have other engagements, but I have just one final question to ask. And it will be that, so we all know what Bosun Tijani is doing. So my question really is, where do you think that we need further reforms in terms of regulation to develop the ecosystem? So I know that there would be more regulation in terms of NIPNA because of the Data Protection Act. But what do we expect to see from the Digital Economy Bill, like Act, if it's passed? What do we expect to see from that?
I can take that. I will say what I hope to see, right?
Okay.
The first thing I hope to see is that the Digital Economy Minister digitizes the government, right? Because it's very difficult for a non-digitized government, right, to support or enable a digital private sector.
Understood.
Right? Mm-hmm. From my understanding today, emails are anyway, let me not get myself into but but digitizing the government is very, very important, and talk to each other, digitally, right? So I think that's, for me, the most critical item that I wish would be on his agenda.
Okay, thank you, Yvonne.
For me, I think the one big thing for me is talent, right? Any kind of policy that can efficiently convert this huge human capital we have into, kind of skilled tech workers that are available, not even just for Nigeria, but kind of globally. For me, that's the one big thing. And I know they're already starting to think about that, right? But you look at some of the numbers. I was looking at the NUC 2019 report, kind of 2 million students enrolled at any one time. There's only about a tenth of that in kind of tech-related sectors. But the startling thing is that, they're graduating less than 10,000 on an annual basis. And we know that they could do a lot more. And even when you think about it, even the 10,000 that they're graduating, a lot of them end up having to kind of upscale or rescale and whatnot, right? So for me, I think about talent a lot, right? Because we have that huge human capital and we have to find a way to kind of efficiently convert it into kind of skilled talent for the global economy.
Thanks, Yvonne. Tomiwa.
Okay. I'm excited about the minister's plan. He's put out a roadmap with a number of areas of focus. So talent, training 3 million technical talents, and they've kind of kicked off work very aggressively and quickly on that, maybe too quickly. But excited about that. So I think that's important. Infrastructure is a major area. So expanding broadband availability. There's been a broadband plan in place for 10 years now or something like that. Can they actually implement? And I think that's an important area. Digitizing government, like Bolaji said, major thing. Yeah. And I'd like to see a lot of progress on that. I think policy reform is one of his areas. So I don't think I want to go too much into the specifics of which individual pieces. I think it's a very strong roadmap.
Yeah.
And the question is, can it be implemented? Can it actually be accomplished? I'm excited to see sort of the energy. I like the fact that some of the appointments into some of the agencies that will drive this,
Yeah.
sort of like they're young, they're people from the industry, they have like actual sort of working knowledge of these problems. And so my sense from a private sector perspective is to support that as much and as aggressively as we can and actually engage, because there is frequently a fear or a disdain for engaging with government for good reasons. But ultimately, a place that I differ from many people within the private sector is that it is possible to build anything meaningful long term without government engagement. I think it's possible to like find an exit for your one play, but no one startup is going to solve education. No one startup is going to solve infrastructure for our country. And so if we're going to build an ecosystem and a tech industry that is sustained and that is valuable over time, you need government to work better than it has in the past. And so I think that engagement is absolutely crucial.
Thanks, Tomiwa. Just to add, I think that implementation is always going to be a dark cloud hanging over our heads until we have the right set of people to just basically push and drive. And implementation basically involves the two parties. That's the government and the stakeholders. Yeah. So, Olufem.
I think he's started very well. But I would like to see a lot more coordination amongst the different functions of government on this digitization journey. One area I can give an example is this issue of identity management.
Yes.
For example, you've got multiple data that you'll find. You've got a driving license, you've got BVN, you've got NIN, and all these different databases. There needs to be some level of streamlining where it makes it easy. We're talking about financial inclusion, for example. Let's make it easy. Let's try and make these things easier for people to come into the financial system.
Yeah.
So if that's even one thing that they can solve, I think it would have gone a long way in addressing that.
Thank you.
All right. I agree with the other speakers. I think the minister has put together a decent roadmap, well articulated, touches on a number of the sensitive areas, talent, funding, and whatnot. I think that the area that would be most critical is something he also alluded to, which is collaborating with other agencies. The ministry is not going to be operating in isolation. When we talk about digitizing government, sometimes it's in execution that you encounter the real walls, because some people, it's not that people don't realize the benefit of digitization, but where there's rent seeking, where there are benefits, the hurdles, what we call hurdles today, are actually empires or avenues for certain people to make a living. So those sort of obstacles, I think, getting the willpower, getting the necessary support, from the executive to break those barriers, I think will go a long way in ensuring that at least the outcomes in areas outside of the ministry itself are achieved, will be very critical. So I wish the minister well. I think he started on a good note.
Thank you so much, and thank you so much. So I think we'll just open up to questions from the audience. Mr. Germany there are a few hands up. So a microphone is being passed around, sir.
Our commercial banks having of functions. They even have USSD codes, chat cards, lots of things. I know that when industries, start off, the infant industry,
so as a body or a group of people who have an interest in seeing the industry grow. I think there will be needs to reach out to the citizen to create some level of autonomy and maybe preclude the mainstream deposit money banks from, taking out of their business or going into their, areas of competence. I think that would help the fintech industries to grow. Because what I see now is a lot of them struggling, trying to do things, but the banks with a big muzzle. I happen to have operated in both sides of the market. I was in the commercial bank for about 30 years. Today I'm chairman of a fintech bank, chairman of the Airtel Bank, which is the Smart Cash PSB. I see a lot of incursion into that business area. I don't know if any of you have something to say about it. Thank you.
It's actually a good question, and I don't think competition is unique to Nigeria or financial services in Nigeria. And to be fair, I think it's healthy. That kind of competition between legacy financial institution banks and fintechs have existed. We're not the only ones. I mean, I always joke about how Jimmy Dimon was railing against the founder of Plaid, right, and just foaming at the mouth. And you can tell that, his frustration, because where did this small boy come from? And all of a sudden he has, but I think it's healthy. And I think even within kind of Nigerian fintech industry, it's kind of impressive and inspiring, what the fintechs have been able to achieve, right? I was just chatting with, an executive at a bank yesterday, and he sent me a WhatsApp, and it's like, is OP or his money points, I didn't want to steal my business, right? And that illustrates, it's insightful, right? Because, he's up at 10, 11, worrying about these things, right? Because these guys have done something. Today, the number 1 and 2 merchant acquirer is a fintech. It's not a bank, right? 10 years ago, it used to be a bank, right? So I think it's impressive, and, it says something that, this kind of nascent industry have been able to grow up, right? And we have now enterprise fintechs that are running neck and neck with the banks. And on the regulatory side, I also think that if we think about kind of licensing, that allows fintechs, especially payment fintechs, to run. It's actually very mature. It's very thoughtful. We're on kind of, second, third iterations of it, right? With the PS, long time, before they could eventually get into the game. And it was always very clear to me that eventually they would get the licenses. So I do think that even, within what we have, you've had kind of a nascent industry, fintechs come, running neck and neck with, with banks. We have different players come in the regulatory, licensing regime. I'm hesitant to kind of advocate for something that explicitly bars, a certain segment or a product, right? But I think in general is to say, look, at the end of the day, we have a healthy ecosystem that's growing. A lot of what we talked about, both with kind of the operators, the regulators as well. And I think as long as we have that happening, right, innovation should win at the end of the day.
And if I can add to that, I think if there's anything at all, first I agree that competition should be fair. If nothing at all, I think the fintech incursion has made our banks sit up. It's allowed a lot of innovation in the space. So it's good for the customer ultimately. If there is anything that I would like to add to that, I'll just say is to create enabling policies for fairer competition, such that the customer is empowered to do business with whom he or she pleases to. And I believe that's where the open banking regulation, comes in, where I can decide that I want to do my credit business with a party A while I do my investment with party B. no bank should be the sole custodian or a gatekeeper, preventing the customer from exploring their options, by building unfair advantage, or making the hurdle so hard that the fintechs can't collaborate with them.
But I want to ask, have Nigerian companies suffered barriers to entry when they move to other countries? Are there stories? And this is just for people listening out there, if you can encourage them and let them know if there are barriers to entry, what they would be, and how to tackle them. Because it's one thing to just say go out there, it's another thing to actually, get to Accra or Nairobi or, and get going. So that's my quick question.
I suspect Bolaji can probably speak better to this than I, because he's likely had portfolio companies attempt it and experience it. I think there are a couple of angles that you might look at this from. Definitely, going and setting up office and presence in other countries is very, very difficult. Across Africa, the regulatory barriers are a lot. The cultural barriers are a lot. You go do business in Ghana, unlike Nigerians, the regulators will make it hard for you. I mean, Nigeria does the same thing. I used to sell beer for a living. I know how long it took SAB Miller to come into Nigeria. So we also make it very hard for people to enter our spaces in a number of ways. The PSBs come and play in this sector. No. And that's not because, that's not because they didn't lobby hard enough. So it can be very hard. Country to country, there's a lot of barriers. And then you got to get there and learn new customer habits, new everything. So it is hard. I think the biggest players will sometimes do it by partnership. I remember when sort of when the big fintechs was raising, they're like, we're in 33 countries. I'm like, fantastic. I happen to know that they're riding on a bank's infrastructure in those 33 countries to be able to transact in those 33 countries, but the entire claim of being in those countries is off of somebody else's rails. And so that's where collaboration comes in. It's like, what are the opportunities to enter quickly? I think one of the big things is just serving from where you are, which is, I don't have offices anywhere on the continent, except here in Lagos, but we're able to serve, we're able to make revenue from other places. If you're looking at software as a service, which is what will probably be the biggest play for a lot of the fintechs, there are certain things that you might need a license to operate in X market or Y market, but often if you're sitting there in Lagos and selling your software to Americans, as long as you have a bank account for them to pay you into, and you can figure out a way to collect money from the guys in Australia or wherever it is you're serving, you don't need to have physical infrastructure. There might be licensing requirements depending on what kind of service it is you're providing, but there might also not be. Like, say, if you're providing accounting software, it's accounting software as long as you learn the rules of that market and you can provide something that works. You might not actually need much licensing to operate in all of these markets. So I think there are a few different ways to sort of skin that cat. And like Yvonne said, our entrepreneurs have solved a lot of problems before. They're going to solve some very interesting ones in the next few years.
Yeah, no, I mean, as I think Tomiwa has answered it very, very well. I think in our own experience, partnership always works, first and foremost. But we've also realized that regulated industries, particularly banking and insurance, are sometimes extremely difficult. With South Africa being the most difficult for a lot of our startups. I actually don't know any of our... I may be wrong, but I'm not sure there are any sort of Nigerian startups that have expanded successfully into South Africa and made real inroads. They can be quite protective of their environment. But also, there's also a bit of difference between industries. So, for example, if you want to finance agriculture, everybody will let you in. So no one is going to tell you not to finance agriculture. It may be riskier. You have to come and put up infrastructure and all that kind of stuff. The other area that we think has been easier has been enterprise software, right? You can operate somewhat under the radar. Your name is not, splashed everywhere, right? So we've seen enterprise software as well being able to make those inroads. But when you're trying to take like a financial services company with your brand into other, then it's tough, especially if it has like a local name or something. So you'll have to use the English translation for that.
All right, thank you. In the interest of time, there's just one question from our online viewers, and there are two questions that go to Olufemi. And really, I think a lot of people are really interested on getting onto the board. But I would say that I would just ask the one and perhaps just email you the other, and then we can give the response to the person. So, but the question is, what will it take for a startup to attract funding from the local capital market, like the way MTN was able to get retail investors investing into it and making returns. So they want and I believe you've answered that somewhat, but if you can just give a bit of context. And that would be the last question, unfortunately.
All right, thank you. So I think I spoke a little bit about the requirements for the tech board, particularly around the startup segment, which is you need about 420 million Naira in terms of market capitalization. That's the minimum entry. You also need 1 year's, at least a minimum of 1 year's operating track record, either for the company itself or perhaps the core investor or technical partner can demonstrate that they have 1 year. And the idea is that it has much less stringent requirements. In terms of how they go about raising that capital, it could be, it's open to qualified investors, HNIs, retail. They would need to obviously get advisors in terms of helping them raise capital. And this is local capital. And it could even come from foreign capital as well. But this is Naira. The idea is that this is a Naira local currency capital raise. And of course, they can do a number of different, they're different. You can do an IPO, you can do different types of capital ways to raise capital at the exchange. So I hope that addresses that particular question. I'm not quite sure what else. I can't tell him who to get the money from directly, but...
I think it addresses. I think it addresses the question quite nicely. I would say that perhaps when we're networking, if we see any of the investors or any member of the panelists, you can ask questions. In terms of those online, please throw out your questions. We'll email it to them as required, but a member of the panel has to hurry up and leave. So thank you very much, panelists, for taking your time out to listen to my rolling questions. I'm happy I'm not on that side of and thank you everyone else for sitting this out. It's really appreciated.